Good morning, everyone, and welcome to the European crossover webinar. And we've seen the euro make a run up here. Let's take a look. We kept talking about 1368 as the next level. Be one moment. If I could find my mouse. Oh, wow. Half a pip off. Yeah, 1368's at that level we talked about for them to go after. Let's go and move this out of the way. We're almost trading tick for pip in Asia with gold, just not a whole lot, but gold was being a supportive factor. But you can see here, we made this move up in here, made up to 1368. Well, yeah, we're actually right to the pip, 1368. That's that number we talked about. Some of these levels I mentioned in the room, I just go by a 2-hour. Well, there it is, 1368 in a 30-minute. So there we go. There's 1368. There's the level I was referring to that we're going to go to next. We kept talking about 1353 before, remember? And but I thought, actually they made it up here and then they kind of faded back. But that's where they went to, 1368. Just above this 23%. So let's get rid of this. We're easing back a bit. And gold, Andy was the one, he was showing us his fractals, and I was pointing out here also looked like I was seeing posted that gold looked like it was certainly going to itch higher. I wasn't sure what it wanted to do yesterday. It actually went up with the Brexit news, then turned around, came all the way back and fought it. And we're looking at this one. I was looking at this one area. I posted in the chat room. You can see how we had come and we came right back up and we're just holding here. So it looked like it wanted to go higher. But we did make it out to that pre-breakout area, that 1219. That's that key area here in gold. And certainly it pushed away from that. There you go, 1218. There's our breakout area that we're well aware of. Remember, the 1219 area. There you go. Everything just moves level to level for the most part. Aussie's still hanging around close to 73 cents. And cable's recovered a little bit from that disaster yesterday. And the dollar index. Yeah, we've been flirting with that. Remember that? I think we had marked as 72. It's actually made it a 73 or 74. Nice little hammer here. Now we've gone and rolled into the January crude. We're starting to get a little bit of a push up here. We talked about this. I thought within 10 days we'd make it back to, I think I was looking for, what was it, 59.36? Well, now we've rolled over. I was looking at December. Now we're looking at January. So same thing here, looking 59.30, yeah, 36. That was after, remember, this is the 161% of this entire move down there, which was 55 at the time, 31, 32, and we just overshot it, and we've since been trying to recover. I think we can probably make it up to about 59.30, 59.40. I said within 10 days, so we've already passed a couple of days. So I think by the end of next week, sometime we'll probably should be able to make it back up there. I guess this is where I was coming up with that. I guess it's a little bit higher in the January as opposed to the December, but that's what I was looking at. And I think with the December, with that area here, we translated to 59.36 or something like that. Dollar CAD's weakening here. We had 31.73 for the support. It tried to hold. It rallied back up to what, 31.90 before rolling back down. But initially that was holding. Before it wasn't. And the dollar yen, we had talked about this before. Remember, kept mentioning talking about that 1368. And we'd come back on this side. Now we came all the way down here, Goslow, as well. I think our bias chart support was 13, was it 05? Let me take a look here. $13.06, and the low was $13.09.5, and then we saw a rebound. Remember, we kept talking about that 1368. There you go, and the rebound high was 1371. Let's go and move into the news. And we'd even change that to a 30-minute yesterday when we were under a lot of duress. Here's that same area yesterday here from the euro. Remember all this trading that was taken on 2 days ago? So we're finding support almost there. That whole volume area was what would be like between 13.12 to 13.18, 19. Seems like a super tight range, but there was a lot of volume that traded. So the market kept using that and popping back. Looked like it was going to dip earlier in the session yesterday. Finally, we started to get this dollar to ease up a little bit, open the door for a move higher, and a little bit of pressure came off of cable at the time. Look at gold, it's still trying to push up higher here still. If the dollar could slide today, boy, I thought this gold could really maybe take off, but it's already doing very, very well. So let's go and get into the news. Before we get into the bias chart, the Australian New Zealand dollars jumped versus sterling amid the Brexit turmoil. The Aussie and New Zealand dollars were set for their best weekly performance in nearly a year against sterling as the political turmoil in Britain fan fears the country could crash out of the European Union without a divorce agreement. Against the Aussie, the sterling held near a 2.5-month trough at 75.93 after posting its worst daily percentage decline since August of 2016 on Thursday. Currency is down about 2% for the week so far, the biggest weekly fall since December 2017. Against the New Zealand dollar, the pound hovered near 10-month lows, touched on Tuesday when it's tumbled 2% for its weakest daily performance since Britain's vote to leave the EU. Sterling is on track to post its sixth straight weekly decline against the Antipodean currencies. The losses came overnight as a series of resignations threatened PM May's government and cast a cloud over her much-awaited Brexit deal only hours after the draft agreement was unveiled. Analysts expect market gyrations to continue. It's hard to say where we head from here, but we are set for a volatile few weeks, said Daniel Ben, head of Forex at ANZ. The Aussie's up 0.5% this week, on track for its third consecutive weekly rise. Most of the gains came on Thursday after robust employment data showed 32,000 new jobs were created in October, handily beating market forecasts of 20,000. We've been talking about this Aussie. Remember when last month we got the employment and it was down to 5.1%. We kept talking about, boy, the numbers look good for the last. It hasn't been a couple of weeks or a 1 month run. It's been getting decent, very good numbers for the economy for about the last almost 3 months. So, finally the Aussie just wasn't going to go down, even when equities, S&Ps were really taking a whack. We didn't go to new lows. Investors still expect the RBA to keep interest rates at a record of 1.5% in the near term as inflation is still tepid and wage growth is low. Brexit turmoil boosts demand for safe haven German bonds. The top-rated government bonds yesterday tumbled to over 2-week lows on Thursday after British Brexit Secretary Dominic Raab resigned, thrusting Prime Minister Theresa May's government into turmoil. Yields on high-rated bonds in the euro area were down 4 to 5 basis points, led by the eurozone benchmark bond issuer Germany. The reason we have a risk-off mode in the eurozone is driven by the UK, said Rabobank strategist Lynn Graham-Taylor. Borrowing costs in Spain and Italy and Portugal all face upward pressure as investors stayed away from riskier assets after the developments in Britain injected fresh uncertainty into world markets. The Brexit deal is dead in the water with resignation of Dominic Raab, and this could be the end of the road for May, said Naeem Aslam. In Italy, positive developments had shielded Italian bonds from the risk-off sentiment sweeping markets. Italian bond yields opened lower after local reports said that Prime Minister Giuseppe Conte is seeking to work with the European Union on a budget impasse to avoid massive fines. Analysts said there was a sign the head of Italy's anti-establishment coalition government was looking for constructive dialogue with the EU after resubmitting a draft budget at Brussels' request earlier this week with only minor tweaks. I think Conte is playing the good cop here, as he should, and that's feeding through to the BTPs at the moment, said ING strategist Martin Van Villay. Any wider target for BTP spreads are to widen are not really there. And this might be the reason why you saw the euro come off here. You saw a pretty good pullback from that 1368, really good 40 pips. But it says ECB's Draghi raises prospect of slower inflation as outlook clouds. The European Central Bank still plans to dial back stimulus at the end of the year, but inflation may rise more slowly than expected, Draghi said on Friday. The Eurozone economy has slowed in recent months amid weaker demand from China, higher interest rates for dollar borrowers across the world, and jury bond markets in Italy when the new government wants to increase spending. Draghi saw no reason to expect the Eurozone's economy to stop expanding and drag down prices growth with it. But he warned of increased uncertainty around the outlook. If firms start to become more uncertain about the growth and Italian outlook, the squeeze on margins could prove more persistent. This could or would affect the speed with which the underlying inflation picks up and therefore the inflation path we expect to see in the quarters ahead. Uncertainties around the medium-term outlook have increased. The ECB still saw risk to the growth outlook as broad and balanced, Draghi said, but it would reassess the situation in December when new growth and inflation forecasts become available. Well, I would think that those would kind of pull, which would kind of, although I would expect the euro to gain, kind of work a bit of a drag. And like I said, we have a nice run here in the euro to start out, and now we've come back. Really, this has a lot to do with Draghi. In a sense, they'll be dragging their feet for any expectations about, everything being unwound. Well, it's not going to happen anytime soon. And that kind of took the wind out of the sails for the euro. Hence, we got this pullback. Draghi stuck to those plans in his speech, but he cautioned that an undue rise in Eurozone borrowing costs would change the path of higher interest rates, hinted a spillover for the U.S. or ripple effects from Italy, all as possible reasons. That being said, that's what I like to do. This kind of sets the tone, this kind of news. But at the end of the day, like I said, you want to use your technical levels. Just like yesterday, we were talking about the next move we were looking for was 1368, and sure enough, that's what it went to the pip. But we showed where we came up with that level, and that was on the 2 hour here, right there, and tagged that level. And then obviously with Draghi flapping his gums, obviously opened the door for us to push, weaken here. Okay, and Draghi stuck to those plans in his speech, but he cautioned an undue rise in Eurozone borrowing costs would change the path for interest rates. If financial or liquidity conditions should tighten unduly, if the inflation outlook should deteriorate, our reaction function is well defined. This should in turn be reflected in adjustment to the expected path of future interest rates. Thus, I think that's why we've seen this euro come back under pressure after push into new highs, and then here we go, and we come back and slide right back down. Draghi himself, an Italian, did not mention Italy in his speech, but he warned about the risk of widening in sovereign yield spreads, a measure of investor confidence in the country's public finances, lack of fiscal consolidation in high debt countries, increases their vulnerability to shocks, whether those shocks are autonomously produced by questioning the rules, architecture, or are imported through financial contagion. So far, the rise in sovereign bonds has been mostly restricted in the first case, and contagion across the countries has been limited, he said. Sterling rebounds as PMA survives resignation, and the euro gains. The British pound clawed back losses on Friday as Prime Minister Theresa May clung to a Brexit plan after resignation of key ministers. Sterling on Thursday suffered its worst day versus the Eurozone in 2016. Allen said the currency should remain pressured so far as further resignations threaten to isolate May. Sterling's volatility has woken up from its 100-year slumber and is likely to remain reactive. The Eurozone rose to 1356. Investors were hopeful. Now, we did actually make it up to 1368, as we stated. The dollar index, a gauge of its versus six major peers, was down 1/10 at 96.81, but right now, here we are at 97.01, so a little bit higher. Financial Times report said that the U.S. Trade Representative, Robert Litzinger, has told some industry executives that another round of U.S. tariffs on Chinese imports has been put on hold. But a U.S. Trade Representative spokesman later denied this report. Yeah, you always get two sides of the mouth with this administration. Most analysts forecast the dollar to remain well supported in coming months, thanks to the Federal Reserve's commitment to gradually raise interest rates. A fourth hike this year is expected this month to be backed by a robust economy and rising wage pressures. Safe haven bid, yen was well bid, changing hands at 1328.3% as the Brexit turmoil drew investors toward the Japanese currency. One of the things we talked about with the dollar yen is that, well, I thought we'd make it up to 1389 and then we just kind of hang around until we come up with the direction. I thought eventually that'd be down. Well, we actually made it up here, and remember we had this as our bias chart resistance for a couple of days, 1422. I just didn't see where we'd be able to push higher. Now we're starting to weaken. And I think that over the next couple of weeks or so, I still think we'll pull back. Remember we talked about this yesterday. Your initial target would come in, I think I said 1256 in here, right there. But I think eventually we could maybe move lower. But this is reminiscent, and we didn't have all the data back here. This is reminiscent before we had that big 300 pip fall. I'm not expecting that at all. But I do expect this to probably come back down and probably move toward by the mid 1250s. Maybe by the end of or middle part of next week. I think we'll continue to slide a little bit. And lastly, let's go on to gold. Gold prices hit a one-week high amid the Brexit turmoil. Gold prices on Friday haven't hit a one-week high earlier in the session as investors sought safe haven status and fears of chaotic departure for Britain from European Union. As I mentioned before, Andy shared his fractal charts in the chat room, so it's great to have Andy in there. And you know, it's kind of crazy when we got the Brexit, the resignations. We shot up in gold, then we turned around, went all the way back down for support. Then we came back down. I wasn't sure what the heck I wanted to do, but as it got towards the end of the day, this looked very, like as if it really wanted to push higher. Because you see here, then you come right back, and notice how you close above these closes right here. You see this bar here? That's what I was saying. I go, wow, it looks like it's itching to go higher, and then we push a little bit higher, and we've worked higher. And Andy, I know he was long. I know Blake was long too. So I said I wanted to go and play this thing for the long side, but I didn't get in, but I used it to play around with the euro in the Asian session yesterday. So I got a benefit, and I thought the dollar would keep on taking off. And I thought if the dollar slipped, boy, I thought we could easily move up to 1228 today. I thought that's why I wanted to play it long. But like I said, Draghi's already kind of thrown some cold water onto the euro, so now we're pulling back with those thoughts about I don't know about inflation, blah blah blah. Well, that's kind of dialed back the euro after a nice push higher. But anyway, getting back on, the issues around Brexit have invigorated a little bit of safe haven buying interest. The focus on the market has turned slightly to geopolitical issues at the moment, said Daniel Hines. Gold should continue to find demand on dips, providing U.S. dollar remains in check, said Stephen Innes. Prices may continue to struggle for direction in the near term as conflicting messages out of the White House cast doubt on the prospect of de-escalation in the U.S. trade war. Yeah, that's exactly what I was saying. With this administration, you got to be careful. You people talk two sides out of the mouth. One guy says one thing and he's a key person, and you have another person say, no, that's absolutely not right. So you really are prone to getting whipsawed with these headlines. Or don't put much stock in them. So if you're able to benefit from that, don't hang around too long, because just like the weather, it can change immediately. Let's go and move on to the bias chart. So this was our resistance earlier in the morning. Remember that 1320? We talked about that volume area, and then we started to slide back. It looks like the euro would start to deteriorate. But then we ended up holding, and we kept bouncing back during the day. Wasn't sure what the heck I wanted to do, but we talked about the 1338, 37, and then we got it. I think we got it up to 42, and then we came back down, slid back down, and then that new level we're looking for was 1368, and that tagged that. So where's resistance today? Well, we got the 1368. We mentioned about mid-session, mid-New York session, I say, or a little bit later as the next area they wanted to go to. Being a Friday, there's not a whole lot of impetus at this point. I still think the euro, I think it looks constructive, although certainly yesterday after what we saw with the Brexit, it certainly looked like it was going to slide back down. Kind of hung on here, and they kind of tested the areas. I think we're open to come down here to this 1311. Not that it's so bearish, but I just think it might be easier for them just to test the waters. Let's take a look at here on a 30-minute. We'll go right there, 1309 for support. You can see it coming right across here. See that? This touches. All right, there. We'll call it 1308. 1308 for support. The euro I thought was going to really have a chance to break out yesterday. I mean, but as we were coming into yesterday from the day before, but the Brexit really turned everything on its ear. Had it not been for the Brexit, I thought yesterday, from Wednesday coming into yesterday, I thought the euro, had it not been for Brexit, I think that we would have been up in here right around 1407. Had it not been for Brexit, so I mean, we obviously got whacked pretty good, but I thought the door was open for us to. From Wednesday coming into Thursday, I would have thought that we had the opportunity to go here, and the Brexit, all those resignations really kicked the legs out of the stool. So, you know, in some sense, Euro's doing relatively well in light of everything. So overall, I'm constructive for it. When we look on the upside for the euro, well, we did reach that 1368. Let's take a look here. I'm going to go right here with this right there, 1356. I think it's going to have a hard time. I mean, I don't know if they'll be the overall I'm constructive, but I'm a little bit concerned today being Friday. I don't know if there'll be the sense of urgency to push this high. The only thing would be is if we saw this dollar pull back, and you know, you got to respect the dollar, and we even have this hammer bottom. You'd have to take this out, and we'd really have to start to slide. I just don't necessarily see that here. Although I am constructive for the euro to go higher next week, for right now, I'd put the resistance at 1356 on a short-term basis. That if we were to get past 1356, that certainly will work as a trigger. And I don't mean on a 2-hour close. I'm saying is if we get past 1356, then they may try and challenge it. But I think it would, you know, those highs of 68. But the dollar would really have to start to come under some pressure. And, you know, it's Friday. The dollar's been proving itself week in, week out. I still don't believe in the dollar to move higher. We've made a marginal high, and I didn't even think we'd even get that. But we've made this marginal high, and we're starting doing it a whole lot. And one of the things you look at 48 hours ago, Powell was now he's starting to say, oh, you know, there's a few little headwinds out there for the U.S. economy. So that's probably going to start to limit any moves up here. Okay, so not saying the dollar's going to turn around and come apart, but he is now starting to sing the song about, well, things may start to slow down a bit, and that may eventually start to yank down the dollar. It's not going to send the dollar crashing or anything like that. It just may allow it to slide back next week, maybe into the, I say probably down here to 96.20 or so. So good 80 pips lower, which would probably equate then with the euro probably coming up to about 14.20-ish or something like that. So overall, I'm constructive for the euro, but I mean, once again, the dollar's proven itself every Friday so far, with the exception, I think it was 2 Fridays ago, we finally saw that dip And we didn't last week, so it'd be a change of pace. But right now, I don't see where there's a rush to jump into the euro when you can come in next week and just play it from the long side. That's the way I'll do it, unless I see something different. The only thing that's a little bit interesting right now from a movement standpoint to me is gold. It's moving back and forth, but euro, I think you're kind of beating your head on the wall for right now. At least that's the way I see it, unless things dramatically turn around. I think 1356 will work as a resistance. Moving on to the cable, enough of that talk. Wow, this thing has really gotten whacked pretty good. It didn't even make it up here. I think this was our resistance yesterday. Was it 2869? Didn't even come close. Yeah, 2869. This thing is under so much pressure. Wow. From a technical level, we'll just go with 2869. We'll keep that, but any moves back up here are going to be hard fought, unless we get some kind of a fabulous headline, and I don't see that coming across. So we may not even see 2869 maybe until next week, but that's going to be it. 2869. You know, we've done a lot of work here, though. If you push here, that'll probably work initially, but the real resistance would probably come in right there, 2890. Although I think we wouldn't see this till next week, but I just don't see where anyone's going to turn around and be buying cable at anytime soon. Support we had was 2786. I don't see anything there on the daily chart. I've never traded cable very well at all. It just moves around too. I mean, the cable queen, without a doubt, is Amanda. There's just to me, I just don't. I like you feel more comfortable with the euro because it just seems to move in a good rhythm. This cable, I don't know. I don't trade those kind of big moves. I never have, and you really have to hang on. And I don't feel comfortable hanging on. Everybody has their own tolerances, and I'm not good. I've made a couple of bucks here and there, but I'm not good at trading cable. I'll just go right here. It's still a long ways off. Let's see here. I think I traded cable maybe a week ago or something like that with a scalp. I don't even remember what it was right now. I just don't trade it very well. I mean, very often, very well or very often. I think I caught about a week ago. I think I caught like 8 pips or something like that. I don't even remember. For right now, it's just going to be right here, 2747. This stuff drives me bananas. You know what I mean? To me, I don't know. Okay, well, unless you're going to trade from, and I think like Amanda trades that way, well, she'll hold on for a while. I can't. I'm just not built that way. But look, and it's not like these are 15-minute charts. These are 2-hour charts. So look at just inkling up inch, and you really have to stay in this. And then finally, it looks like it's kind of run out of gas, and it's just slow. Eventually, it does move. It's just I can't trade that kind of market. I just simply can't do it. But it's going to be 2747 for support. And let's go move into the Aussie. Well, here's that 73.20, and I think we kept the resistance lower right now. Yeah, 72.92. We're going to give the Aussie, not the expected move today, but the resistance right now is just going to be the 73.20. They may try and shoot for. They may even be able to get a little bit higher. You see right here, little lip here, 73.25. Tell you what, we're going to go with that 73.25. Not that I expect to be resolved today, but you see, we've got all this resistance right here, 72.90. I think we had it 492. I don't see it going gangbusters, but I think that's what they'll go for, although we won't see it till next week. That'll be your resistance, 73.25. Support. Hit 72.30. On a short-term basis, you can see a little bit of a double top here. So they probably want to come back down for support, and we'll put it right there. 72.28. That's not even that far. Let's just right there, 72.25. We'll probably see a little bit of demand. Doesn't mean that it won't move a little bit lower, but that's where you probably see some people trying to pick it up, 72.25. And let's move in here. There's our resistance, 68.45, the zone, the top of the zone. And sure enough, that's where it went to. It was just above that 38%, but that's why, to me, I like just trading the levels. It just makes sense. It's just where the market rotates to, and it rotates to levels. The euro does that very nicely. And you can see we had 68.45 for our resistance, and the high was 68.42. Well, we'll keep the resistance there at 45. You can see it's a zone there. You can see how the market traded within this zone. So there's our resistance. So that held. Support now would be, keep it simple, 67.58. Because you have to figure that after we've made it up here, we even got past the 38%. They came up to this zone here, missed it by three pips. I'm saying the market missed at the level or hitting that zone by 3 pips. So probably the market will need to get some rest. We'll probably find some support there. If you, I don't think everybody might be scalping it, but if you were, support would be there, 67.81. But I think they'll make it eventually down here, 67.58, to pick up some new passengers before they go back up. So go 67.58. Who would have thunk it? After months and months of falling, the Aussie and the Kiwi both biased as bullish. Nobody would have believed that a month ago. And let's go move into the dollar CAD. Well, we're starting to see crude trying to work up a little bit higher. That's on a 30-minute. Usually I look at it on a 2-hour, but just so we'd see anything that's kind of changing around. So we're starting to see a bit of an upward trajectory. And certainly that's weighed here on dollar CAD. We had a support at 31.69. Initially that held, you can see here, and then we saw a nice rebound here. So we had 31.69 yesterday. I think I mentioned, I guess it could have, I know I put 31.73 in the chat room, but I guess we had 31.69. So I wasn't looking at the bias chart. And we got as low as, actually initially that held, but then we broke as low as what? 56. We turn around, rebound all the way back to 31.98, 31.91, and then we come down, test, and we're just holding around this key area. There's that. There you go, 31.71. Resistance will now be right there, 31.85.5. I think that might be a little bit tough to get to, but we'll see. So we'll call it right there, 31.86. I don't know why that 32.48. Well, I guess, before it fell, I guess, but let's take a look at this on a daily. That would be key on a daily, 32.06. See that coming across these touches right there, 32.06. I don't think that's going to happen, but it'll be very important for it not to get above 32.06. Support now. They came right to the 23%. Support's right there, 31.35. You see the touch here, right here, and then that confluence is with this right here, and just about right there. You see? So when you pull that back down, just to split the difference, and you see right here, see that right in here, how they were hanging around that, these little closes right there. So that confluence is with that here, we take it across 31.33. So that's where you probably see some nice demand. Probably really equates to where you see some good volume demand, which is what it's all about. I've got that here somewhere. We'll take a look at it. Let's go look at the volume, but then again, we'd have to look at the future, so that probably wouldn't work, be as clear. But anyway, the 31.33 should see some good demand on the about 40 pips lower. Let's go into the dollar Swissy. It just does its own thing. The Swissy listing is still holding up really well. Unless you were holding this for a short-term basis, this thing would drive me bananas. It just doesn't move. Well, it moves higher, but I mean, in very, very small increments. And then occasionally you get a quick dip and then it just gently starts to move. It hasn't really done a whole lot. I mean, if you look at this, you'd think these were like 15-minute bars. Hard to believe they're 2-hour bars and the market's just not even moving. Well, you can see the resistance right there. 101, essentially. Just call it par 99. Looking on support, our usual suspect here, par 34. You can probably make the case right here, but that's a real support, par 34 on the Swissy. Looking at the dollar yen, we mentioned this the other day, and I was saying bye-bye dollar yen. I think that we are starting to roll over. I don't think nothing's going to happen fast, but once again, any moves, I said this relentlessly a couple of days ago, any moves back to 1368, I would just fade those. So we're just going to stick with that, or call that 1368. See, we still had it right there for yesterday. And the high was, even on this rebound, the high was 1371. So I keep saying, can't say enough, 1368, 1368. Really just came up with this right there. You see that? Once again, I just go with just the touches. No anything special I do, just go right there with the touches. There it is. Biggest dollars right there, 1368. And that held it 2 days ago. It actually held it yesterday. And really that's the demarcation right there. Support, I think I mentioned this yesterday. I think we'll eventually come down here to 1256. Let me see. Okay, that's where it came up with it right there. You see this little one right there? Right there. And that almost equates with this little low here. So 1255. I think we'll make it down to 1255 in time. But I think that we'll just start to rotate lower. Just, we got up here. It wanted to resolve itself to 1389. I thought that was going to come, but they ended up holding up and getting even much further up to 1420, and we've just been hanging around, and now we're starting to rotate. And I think eventually we'll rotate. I don't think the wheels are going to come off the caboose or anything like that, like it did. I think it was about 5 months ago. Remember, it was trading around 13 or 14, and eventually we broke. I think we had moved down to 12 or something. We broke like 300 pips in like 3 days' time. Or 2.5 days. I don't think that's going to happen, but I do think we'll make it down to about 1255. And your line of demarcation, 1368. For right now, the support will come in. Go with the technicals. $12.93. We'll see if there's a fib somewhere. See if we can get a fib confluence. Well, it'll be off of here because we've already set that high, so that wouldn't make it. So now it would just be off of this. You couldn't do it from here because we already made this high. You can't go from here to here. Not you can, but it's just not going to make any sense. So it's just going to be the most recent one. I'll go 12.93. I'm not seeing anything that's confirming anything on a fib or a confluence. But so we'll just go 12.93. Let's go with the cash dollar index. To me, it looks like the market just wants to take a little bit of a rest. I was going to say respite, a rest. This is a dark cloud cover. And I wouldn't necessarily call this a medium-legged doji because the bars aren't that long, but see how we're just kind of sitting here. If you were to extrapolate this to, someone was asking me about this the other day. So I was like, well, what direction do you mean that's going to go in? Okay, so this isn't really a long-legged doji. You see, it's really small. But let's just act like it was a long-legged doji. So here's the thing. I was medium-legged doji, long-legged doji. So what's the prevailing direction of the market? And I'll show you when I refer to that. That one's not a very long, it's very tight, but let's go here. So the prevailing direction of the market is pretty clear. It's been high, right? So generally what happens, and we did get this dark cloud cover here. Okay, so it suggests the market's probably a little bit tired. But generally what you're going to happen is when you get a medium-legged doji, and the wick isn't very long, it goes back to this. And that's very tight, so it doesn't make as much sense. Whereas if you get a much longer wick, it does. So what that means is bulls don't have control because we finished in the middle. Okay. Bears don't have control at the bottom because we finished in the middle. Okay. So what's the prevailing direction been? Well, it's been up. So generally what you see is the market then to pull back. Okay. But once again, these aren't very long, but you can see, where you can see where these work together is we just had a dark cloud cover. Okay. So it already, trying to think of the right word, but anyway, it suggests that we're probably a little bit bearish. Okay. On a very short-term basis. These are, it's on a daily. And then the market is a little bit tired. We're not seeing any upside here. So we'll probably want to pair back. Doesn't mean it's woefully bearish. It just means that we'll probably have to pull back for a bit of rest because once again, what's been the prevailing direction. Okay. But if you're looking at from maybe a little bit of a catalyst, well, Powell was in the evening 2 nights ago stating, well, he does see some concerns on the horizon. Well, to me, it seems like he should have pointed that out at this last meeting. Of course, there was last meeting was last week. Now all of a sudden he sees clouds on the horizon. But that being said, so we'll probably have to take a little bit of a rest. So that's probably going to keep the dollar from running up here to make new highs if now they're starting to change their tune a little bit. So we'll probably have to come back down for a bit of a rest. Now we just have this little, after this dip, this little hammer bottom right here. So it's probably hard to think we're going to take this out on a Friday, as well as the dollar's been doing overall. If we were, then it would certainly open the door for us to go much lower. But on a short-term basis, we'll just go with 96.56 as support. Although I think probably next week we'll be able to ease back a little bit further. Why I think I'm constructive on the euro going forward for the next week. If it wasn't for Brexit yesterday or the resignations, I think we would have been at 14.07 in the euro. I was thinking from Wednesday, I was thinking, wow, you know what, we're probably going to get a nice move. Then you wake up and like, oh, what the heck happened? So I think we are, but I don't necessarily see us making any big moves on a Friday, considering that the dollar has been like finishing strong every Friday for nearly 2.5 months, with the exception of 2 weeks ago. I thought we might get that follow through last Friday, but then with the FOMC, that kind of spun things around. People were surprised, myself included, because when you think about how far equities have fallen, you would have thought that the FOMC would have made a reference to that, and they didn't. So that's what allowed the dollar to make a move up even that last Friday. Now, 2 days ago, here's Powell. Now he has concerns. So, but that being said, like I said, that's why I think we can move it higher next week here on the euro. I just don't necessarily see anything happening right now. If you look at technicals, anybody, people would say, well, I like being long the dollar, and I feel good about this right now. So they may just play it that way for the short haul, and that's why the euro might have a tough time trying to make any moves now. And I think it's what Draghi said this morning about the inflation or tepid or his some concerns. They probably pulled the euro from this upper area here, and so I don't necessarily see it taking off, but we shall see what happens. That being said, as I mentioned here on the cash dollar index, support here, anyway, that's my 2 cents, is 96.56. It would be pretty significant, though, if we break lower here. I don't think the wheels would come off, but it's certainly going to really spin this thing bearish if we were to break to new lows here. Resistance right there, 97.30. We'll call it 97.31. Same as yesterday. Gold, gold really looks like it wants to go higher. Here's that 12.19. We almost made it there. For today, in case we do get that pop, we'll just go with 12.23. I think gold could have really taken off today. Not saying it won't, but if the euro was higher, I think we could have easily been up here at 12.28. Potentially, I think we could have made up there. Right now, we'll just keep it simple. 12.23 for the first area where they want to go to. But I like gold going forward. It's starting to look good. I think it did really well. They actually tried to rally it on the resignation news yesterday, and then they turned around and came back down to 12.08. We remember on the way up, we were talking about 12.08 being that key level. I mentioned that a couple times in the chat room, saying, watch out, because when we were at 12.04, so that next key level is 12.08. Well, we went there and then some. I think we eventually got up to 12.09 and change before they back down just a little bit, not a whole lot. Well, look where they went to support. Remember, that was that key area, 12.08. Well, when they rallied up to 12.16, they came back, and where did they go to? 12.08. Then they started rebounding. It looks very constructive from a technical standpoint. So it looks like they really want to push them higher. And I think that you'll make it up to 12.23 before you see some people take a little bit of their longs off. Doesn't mean it's going to stop it, but that'll be the pause area here. Support right now then would be right there. Let's just call it 12.13, which isn't very far away. Moving into the bonds, we had 39.09 and 38. Let's see, 39. Well, we even got past the 39.09. They did give a little bit of a good push. I think you have to be careful with the bonds, because I think now the market might be starting to bite on that the things may slow down a little bit. And I already mentioned Powell was already which seems nonsensical. Now to be raising up the concerns about clouds over the horizon when they didn't even mention anything last week. We'll go with 39.22. Support on the bonds. $38.11, which I think we had already marked off. Oh, no, 38.19. So it'll be 38.11. But I'd be careful with the bonds going forward. I think that they may start to change and start to get a little bit more of an upside move onto this. We may see that next week. Boons are higher. Obviously, the concerns with Brexit. No one's going to be selling boons with any degree, going into a Friday in light of all this Brexit news. Resistance next key level in boons, 61.04. Be careful, I'm saying, because we can easily get past that and just push them all the way back up to here, going into the weekend. So it's going to be 61.04. Support, keep it simple. I can't see it going all the way down there. $60.40. Let's go on to the DAX. Well, we had support here at 11,335, but obviously now we're starting to go and hit the skids here a little bit. I got to be careful going into a Friday also. We're just going to go with the technicals, and there it is. 12,239. If they continue to slide, which wouldn't be surprised if they do. That's 11,239. Resistance. Same thing here. Just going to technicals. 11,450. That's a long ways away, but it's actually going to be 11,413. And you can see, boy, they really pushing the momentum. But there's some support coming in right here where they just got their 11,296. That's going to be resistance right there. 11. You see that coming across right here? See that? That cut is coinciding with that low there too. 11,380. You're trying to move up a little bit higher, but I think I'll have a tough time trying to get past this area, that 56. I think we had it marked as 1356. And on a short-term basis, it'll be 1340. I think they'll have a little bit of trouble getting past there. But we'll see. Gold, to me, I think gold provides the best market for today. I mean, for liquidity and movement. Still, well, we got that upside bias, but we'll see what happens. And to me, the key level will be that 1223. There's the bias chart. I'll post that in the room. And thanks for joining us here on the European crossover. Good luck trading, everybody. Have a good weekend.